The loudest investors often lose the fastest. They celebrate every trade. They post every gain. They announce every move before it has time to mature. They confuse visibility with progress and attention with success. But markets don't reward noise. They reward patience. History quietly shows us something powerful. The investors who build lasting wealth are rarely the ones seeking applause. While some chase excitement, others study in silence. While some react to headlines, others prepare for years. The crowd moves emotionally. The disciplined move deliberately. And over time, sometimes slowly, almost invisibly, the silent ones win. Not because they are lucky, not because they are louder, but because they are patient. Today, you'll understand why silent investing creates real wealth and why discipline will always outperform emotion. Welcome to Silent Wealth Stories. This is not a channel about chasing trends. It's not about quick flips, viral trades, or overnight success stories. This is where we study how real wealth is built, quietly, deliberately, and strategically. Because if you observe the investors who last decades, the ones who preserve and multiply capital over time, you'll notice something important. They are rarely the loudest voices in the room. They don't react to every headline. They don't broadcast every move. They don't invest based on emotion or social pressure. They operate with structure, with patience, with restraint. Here we focus on those principles. We break down how disciplined investors think, how they assess risk before reward, how they position themselves early, and how they allow time and compounding to do the heavy lifting. Because sustainable wealth is not dramatic, it is methodical, it is consistent, and often it is quiet. The noise trap. Modern investing has slowly transformed into entertainment. What was once a disciplined financial activity is now packaged as daily drama. Breaking news alerts flash across screens, market commentators react in real time, social media feeds overflow with predictions, hot takes, and urgent opportunities. Every hour, there's a new must-buy stock. Every dip is either the end of the world or the opportunity of a lifetime. Everything feels urgent. But here's the uncomfortable truth. Urgency is rarely a sign of value. It is usually a trigger for emotion. And markets are extremely efficient at transferring money from the emotional to the disciplined. The loudest investors often operate on reaction. They chase momentum because they fear missing out. They buy because others are buying. They sell because others are panicking. They confuse movement with progress. But activity is not the same as growth. A portfolio that moves constantly is not necessarily a portfolio that compounds. This reactive cycle creates volatility. It creates excitement. It creates conversation, but it does not consistently create wealth. Real investors understand something different. They know that excitement feels productive because it gives the illusion of action. Discipline, however, often feels slow. It feels uneventful. It feels boring. And yet, discipline is what protects capital. Discipline is what captures undervaluation. Discipline is what allows compounding to work uninterrupted. While noise seeks attention, discipline seeks results, and over time, results are what remain. Silent investors study patiently. Silent investors do not rush. They understand that money made quickly is often money lost quickly. Instead of chasing price movements, they study businesses. They ask deeper questions. How does this company actually make money? Is its revenue consistent or unpredictable? Does it carry dangerous debt? Is management competent and disciplined? Does this business still matter 5 or 10 years from now? They read financial statements. They examine cash flow. They analyze long-term earnings trends, not just quarterly headlines. While others are watching price charts tick every second, silent investors are studying fundamentals. And then they wait. This is where most people fail. Waiting feels unproductive. It feels like you're missing something. It feels slow. But opportunity does not disappear overnight. Strong businesses rarely go from undervalued to overpriced in a single day. True value reveals itself over time. Silent investors understand that timing improves with patience. They don't move because something is trending. They move because the numbers justify action. And when they finally invest, it is not based on hype. It is not based on social media excitement. It is not based on fear of missing out. It is based on data, on analysis, on preparation. Patience gives them clarity. Clarity gives them conviction. Conviction removes emotional decision-making. And when emotion is removed, mistakes decrease dramatically. This is why silence creates advantage. While others are reacting to headlines, they are preparing behind the scenes. While others are chasing noise, they are building understanding. And when opportunity appears, they are ready, not surprised. They buy undervalued assets. Silent investors search for value, not excitement. They are not impressed by headlines. They are not attracted to what is trending. They are not moved by popularity. They are looking for one thing: mispricing, a gap between what something is worth and what the market currently believes it is worth. That gap is where wealth is created. An undervalued asset is rarely celebrated. It does not dominate social media conversations. It does not make people feel smart at dinner parties. In fact, it often looks boring. It may even look uncomfortable. Sometimes it looks risky to the impatient observer. Because when an asset is undervalued, there is usually fear attached to it. Temporary bad news, short-term uncertainty, market overreaction, economic doubt, and most people run from uncertainty. Silent investors lean into it, carefully, not recklessly, not emotionally, but analytically. They ask, is this problem temporary or permanent? Is the fear justified or exaggerated? Has the market overcorrected? If the fundamentals remain strong and the price has fallen below intrinsic value, they buy, quietly, no announcement, no celebration, no dramatic prediction, just disciplined positioning, because they understand something most investors don't. The market eventually corrects mispricing. It may take months, sometimes years, but value has gravity, and when perception catches up with reality, prices adjust. And when that happens, those who bought quietly benefit the most. Not because they were lucky, but because they were patient. Wealth is rarely built during moments of celebration. It is built during periods of uncertainty. When others hesitate, when others panic, when others doubt, that is when silent investors position themselves. And when confidence returns to the market, they are already inside. They hold long-term. Holding is a skill. Anyone can buy, anyone can sell, but very few people can hold. In a world addicted to movement, where apps refresh every second, where portfolios are checked hourly, where red numbers trigger panic, staying still requires strength. Silent investors understand something deeper. Wealth is not built in the buying, it is built in the holding, because holding unlocks compounding, and compounding is quiet. It doesn't look dramatic. It doesn't trend, it doesn't feel exciting, but it multiplies disciplined decisions over time. A 10% return doesn't just grow once, it grows on top of itself, and then on top of itself again. Time becomes the engine. Short-term volatility does not intimidate silent investors. They expect it, they know markets rise, they know markets fall, they know fear comes in cycles. Volatility is not a surprise, it is part of the process. So when prices dip, they don't ask, should I panic? They ask, has the long-term thesis changed? If the fundamentals remain strong, they stay. Because strong assets, held long enough, have historically appreciated. Not every day, not every month, but over decades. And silent investors think in decades. They are not trying to win this week. They are not trying to impress anyone this year. They are not chasing quarterly validation. They are building something that outlives headlines. This mindset changes everything. It changes how they react to downturns. It changes how they measure progress. It changes how they define success. Instead of asking, how much did I make today? They ask, am I positioned correctly for the next 10 years? And that single shift separates noise from wealth. Because while the world obsesses over short-term fluctuations, silent investors let time do the heavy lifting. And time, when paired with discipline, is the most powerful wealth-building force available. They avoid emotional decisions. Fear and greed are the silent killers of wealth. They don't announce themselves. They creep into decisions slowly. They distort judgment. And if left unchecked, they destroy portfolios. Excitement tempts people to overpay. The thrill of the next big thing makes rational evaluation disappear. Fear tempts people to sell too early. A dip in the market feels like a disaster, even when the underlying asset remains strong. Silent investors understand something most people don't. Emotion is the enemy of consistent wealth, so they remove it entirely from the process. They don't let impulses drive their actions. They don't chase applause. They don't panic at every headline. They don't compare themselves to others. Instead, they create systems, rules, plans, checklists. Every decision is guided by strategy, not by mood, by evidence, not by sentiment, by logic, not by hype. They invest not to impress. They invest not to keep up with the crowd. Silent investors execute. They invest to build true financial freedom. And freedom requires calm judgment. It requires foresight. It requires patience. It requires the courage to ignore short-term noise. Silent investors develop this skill over time. Each rational, emotion-free decision compounds. Each small victory reinforces confidence. Each disciplined move builds momentum. By acting quietly and deliberately, they avoid costly mistakes, the mistakes most investors make when they follow emotion. And over time, this calm approach produces results that speak louder than any announcement ever could. While others react, while others speculate, silent investors compound, and while the world chases drama, they quietly accumulate lasting wealth. Wealth is not built in excitement. It is not built in loud announcements, flashy posts, or quick reactions. It is built in discipline, in patience, in careful, deliberate action that compounds quietly over time. It grows in quiet accounts, in portfolios held for years, not days, through decisions made calmly, consistently, and strategically. The silent investor understands a truth most people ignore. The world rewards noise with attention, but it rewards discipline with results. If you want real wealth, if you want freedom that lasts, then learn to move without announcing every step. Invest with intention. Act with patience. Hold with conviction. Let your actions speak louder than your words. Stay calm. Stay patient. Stay disciplined. And ultimately, remember, money does not reward volume. It rewards strategy. It rewards preparation. It rewards patience. And the quiet investor always wins in the long run.